okay, Nicholas, we are post the Your Life, Your Terms event. So that was the biggest one we've ever done. And that was a lot of work. So I guess it's a big shout out to the team to pull that off.
Yeah, I think a lot of people think they're surprised just that, we do it in-house and we don't have this
small team
event management company running that type of thing and stuff. And they've come a long way. I mean, we've done a lot of them now. We've got a lot of things wrong over time, and we probably still get a bunch of things wrong, but we get a lot of things we used to get wrong. I think we get right now. So well, I don't know. We try to have fun with it.
They have always one AV issue. Doesn't matter what. 2 times ago it was the screen. I don't know if you remember, the screen went blank. For like maybe a minute or so, and I'm like, holy shit.
But I've never been to a conference without an AV issue.
No, I know.
It's small, big, whatever, it doesn't matter.
Yeah, this one was the clicker, but we got it sorted.
And it was really, I thought it was just you making a bigger deal about it than it really was. But then when you gave it to me, I had to use it. I was like, oh my God, this is a disaster.
Yeah. I walked off the stage. Here you go. Good luck. So look, this is one of the biggest things that I think it was really cool. We had like these great speakers there. We had Bryce there. What was Bryce's last name?
I don't know if I'm butchering it. I believe it's Sheschuk. It's like SCHES at the beginning and then CHUK.
And he was one of the co-founders of Wind Mobile.
Yeah, he was a CFO and one of the co-founders. And he said that his wife said, you can't just be a boring accountant. But from his talk, he was not a boring accountant at all. It was interesting and it was great.
He didn't come across like an accountant.
No.
And his story's wild.
Oh my gosh, yeah.
So that was great. Jeff Booth, we did a special thing for VIP members on Friday night up at Piper's with Jeff Booth. That was kind of cool. That was like 140 of us. Jeff Booth, smaller environment where we recorded, something there. I don't know if we're going to release it or not. And then we did a live Q&A with Rockstar members who were there afterwards. That was really cool. I really enjoyed cool, that. Yeah. And then Saturday we had him on again, and he kind of spoke about this idea that there's 2 systems happening right now. There's like a fiat dollar-based monetary system that's based on credit, and because it's based on credit, it always has to expand. And then you have the productivity and the tech advancements happening in the world that is trying to push prices down because things are getting cheaper and more, they're being produced more efficiently, so they're becoming cheaper. And the 2 systems are at odds and they're fighting. And the tech is trying to push prices down of things, basically what's happening is that you're trying to measure efficiency in a credit-based dollar system that needs debt to always go up. So you have like these 2 massive systemic forces just fighting each other right now. And I guess the message is one of them is going to snap. Is the dollar-based system that needs to continually expand going to snap? Or is the technology-based system that is pushing prices down of a lot of things going to snap? And just from my own tech-based background, I think it's the dollar-based system that's going to snap. You're not going to really stop technological progress. So that to me is a big thing moving forward. And
it's funny because I saw this headline that Gary Gensler said, I guess it was yesterday, it says a financial crisis brought on by artificial intelligence will be, in quotes, nearly unavoidable without swift and meaningful action by regulators. So,
that's what he's saying.
Yeah, but this, I don't know if it's a new scapegoat in town because they always need some scapegoat for the financial crisis. It can never be them, but I didn't go deep into it, so I don't know what he's referring to. But to your point, the proliferation of AI and the speed at which it's moving, bringing the cost of so many things down, the cost of just the production of so much stuff, it's forcing more deflation. Right? Because even in wages and salaries, like the cost to produce now an article, and I'm not saying it's going to be as good as like a professional writer, but compared to someone that was earning whatever level of salary before, this is just as good. And then that salary now gets pushed down. The value of that just gets pushed down because the cost to create it gets pushed down. So it just changes. It can change things really quickly from a deflation perspective, I guess, to Jeff's point and what he's talking about with technology and what it does.
I think this is going to be the story of our generation. I feel like
I told Jeff when we were like at one point when I was talking to Jeff, I was like, once I saw that, because his book explained that, and I kind of got it, but it wasn't until I was listening to him on a podcast somewhere or something where it just really clicked. And once that clicked for me, I was just like, like my mind was blown, and I just you can't unsee it. Once you see that and you understand that, I feel like you can't unsee it because it literally impacts everything you touch on a day-to-day basis. Like look at look what they're trying to do with technology with AI and robots in fast food restaurants. They're trying to make like, you know,
have you seen I showed you, I think, the video of Chipotle that's testing out the burrito bowl that goes around and robots fill it up all with rice and beans and meat and stuff. And then just there's a human at the end to package it.
And it's outrageous. So the cost for that Chipotle bowl, the cost to produce it ends up going.
You don't need any more employees on that line. You don't need to worry about sick days, overlapping shifts, HR issues go down, everything goes down.
But if you have that go down, then you can't have it in the way our system's structured, to your point.
Have you seen the Amazon warehouse? Did I show you that one that has no humans? There's an Amazon warehouse that knows, and I told you about a fact.
I think Walmart's trying to do one too, from what I saw.
And I know there's rumblings out there of Tesla doing a factory which doesn't have humans in the factory at all, which would also mean you don't need the lights on. You don't need the HVAC to hold room temperature. You don't need a cafeteria. You don't need a parking lot. You don't need human resources. I mean, it's just wild.
Well, in McDonald's, isn't there a location already? Or they test?
Yeah, Seattle or somewhere has like
Texas, but somewhere.
Texas, I think it might be Texas.
And it's just literally, it's a drive-through only, but like the food is prepared and delivered. Like there's no one there. Like it's outrageous. So
prices are going down, but the credit-based system that we're in with all the debt in the world, it must go up. There's like I think we're just crossing over $400 trillion in global debt.
Okay, so explain that to people. So why isn't it a good, so this ultimately is good, right? The prices go down, so technology pushes the price down of everything. So that's good. So then people can afford more. So what's the problem with it?
Well, I guess the problem is if you let's just use a simple example. If you have $100, I haven't thought this out, so I hope this comes out okay. But if you have $100 in debt and your income is like, it's a 4-to-1 ratio right now. So let's say your income's like $25 and you have $100 in debt. Well, if the $25 is measuring all the economic activity that's going on in your life, the GDP of a country, your personal life, whatever example we're going to use, and there's $25 of economic activity, but there's $100 in outstanding debt, how do you generate enough from the $25 to pay off that debt?
If the price of everything's coming,
if the economic activity that you're measuring is shrinking because of technology and efficiencies, everything's getting cheaper. So really that $25 becomes measuring 24, 23, 22. And then you have a dollar, you have a money that is credit based. The money must expand because every dollar that comes into the system with interest owed. So you need more and more and more dollars entering the system to pay off the debt that came before it. So you have an economy that's trying to kind of make things more efficient and prices cheaper, but you have an actual money system that's trying to measure that requires expansion.
Yeah, well, yes. Okay, so I get that. I just thought of something else because just think of the tax base now. So prices come down. Just think of the sales tax. What happens if the prices
if it's all robots?
Yeah, well, the sales tax, the prices all come down. So, I mean, there's income tax and stuff to consider as well. If it's robots, income tax disappears, so the governments don't have that revenue source. Sales tax starts dropping, so that tax source starts going away. So they have to start looking at other sources to pay off their commitments and their debts to people.
And look how technology is impacting us right here. Like you and I are sitting in this podcast. No one's changing the cameras. Mm-hmm. The camera changes angles in this office here where we're recording, and even based on our audio. So there's no human.
Yeah.
When we started this, do you remember? We used to have somebody in the hallway. Remember?
Yeah.
On an iPad, changing the camera angles. Now that person is no longer needed.
We didn't do that for long, to be fair. That was a disaster.
It was a disaster, but it's no longer even needed.
Yeah. And then post-production, to create clips and things like that for social media or whatever, there used to be someone that had to spend a ton of time there. And now there's AI that does that, and it changes the clip based on when the topic changes. So like, is it perfect? No, but is it
still need a human? The person that used to change the camera angles, that's a role on our team, but now has to go through those clips and decide which ones to use and that kind of stuff.
Yeah, but
so they're still a human, but you don't need 3 humans.
Yeah, and think how much time it takes now to do that versus what it took before. Right? So it is changed dramatically. Because they just look at the clips. The clips are all created and they can just adjust them very quickly on the platform.
And I think this is the biggest thing that kind of I can't stop thinking about. It's whenever Greg Foss first used that example of there's 4-to-1 debt to GDP. So there's like $400 trillion in debt in the world, going back to what we were talking about. And there's like $100 trillion of economic activity. And if the debt at 400 trillion is growing at like 5%, well, what's 5% of 400 trillion? What's 10, 40? So it's $20 trillion if I'm doing that right. There's $20 trillion in interest owed. Well, if the GDP is 100 trillion on a 4-to-1 ratio, that's $20 trillion. It has to come out of that GDP. So that GDP, if 100 trillion is just going to interest every year, that's hurting the economy that can't be spent on new development of new things. So how do you overcome that? You try to use inflation or debase the currency so that you artificially grow the economy so there's more dollars in there to pay for all the debt that's owed. Because if you just took 20 trillion a year from $100 trillion economy, a $100 trillion global economy to pay for the debt, you've wiped out $20 trillion. You've wiped out 20 trillion of a $100 trillion economy. Okay, so do that 2 or 3 years in a row. It can't work.
Yeah.
You're destroying so many dollars in the system that the economy doesn't exist anymore. There's no dollars in the system to do anything.
So
after 3 years, that's $60 trillion. You're left with a $40 trillion economy in the system. I'm generalizing here on a lot of fronts because new money can be created in this kind of world. But at a high level, that's really what's happening.
Yeah. So let's extrapolate that out a little bit. So, because we've already seen that. Let's not even talk about from today forward. We've seen it over the last 5 or 10 years. So then what's happened in that world? So in that world, what's happened is people then are incentivized because of the way things are happening. They're incentivized to then take the money that they do have and put it in something that goes up in nominal terms. So the price tag on it goes up. It doesn't mean that the purchasing power, of it goes up. So that buy stock markets or
real estate,
stock market, real estate, whatever. I mean, look, for a while it was NFTs and whether it's, Bitcoin long-term or not, but Bitcoin and all these other crypto things had a run there. So people were just looking at, hey, I take this money, I put it anywhere because the value of all these different things, which is jumping because this type of thing was happening. So let's stick with kind of the more, ones that people are familiar with. So not NFTs and cryptos, but specifically stocks and real estate. And when you look at those, sometimes the returns aren't what you think.
Well, the S&P 500.
That's what I was.
Yeah, the S&P 500. Somebody put this out on Twitter a few weeks ago. The S&P 500, over the last 20 years, if you divide it by the growth in M2 or the monetary base, it's up 4%. So over 20 years. So you could invest in 20 years. You did the right thing. You took your money. You invested it for 20 years. And then you cash out after 20 years and the dollar number that you're looking at looks way bigger. But when you take the money out of your stock investment, your S&P 500 index fund, the amount of purchasing power you control in that moment is up 4% over what it was 20 years earlier. That's the biggest thing that I think is the highway robbery that goes on in this system. And the example I always like to use is that in Canada, M2 has gone up like 5 times since, year 2000 about till today. So if you had $10,000 in the year 2000 and you just squirreled away in a savings account and it paid like no interest over that time, let's just say it paid no interest. I know you got a little bit of interest, but just for sake of example, it's $10,000. After 20 years, you take it out of the bank and you have your $10,000 again. Did I say 20 or 10? I thought I said 10. And
I stopped listening to you at the beginning. It was
$10,000.
As soon as we started the podcast, I started.
$10,000 you take out after 20 years. But if the monetary base of M2, if there's 5 times more Canadian dollars in the system, when you take out your $10,000 20 years later from the bank, you have 1/5 of the control of the purchasing power of that monetary base. That's why after 20 years, you saved your money, but you lose so much purchasing power. So you're forced to put it into things like you think that are going to outpace, like the stock market, which we just talked about, that barely does because it has no leverage. Real estate does if you're talking investment properties, only because of the leverage, not because real estate in and of itself is so great. It's only the leverage. You put 20% down.
Yeah, it allows the ROI to be higher because of the leverage.
Yeah, if the property goes up 8% a year,
provided it cash flows and you cover
it's risky,
expensive maintenance.
There's all kinds of hassle dealing with it, but it's only one of the only ways. You put down 20%. If it goes up on average 8% a year, and I know averages are difficult over time to really,
you get a 5x multiplier on the 8 because of the leverage you use.
Yeah, it's like a 40% return on year 1. So you've outpaced the debasement. So it's the leverage on real estate that really is the only thing pushing you ahead. It's not like real estate is just so fantastic in and of itself. It's the leverage that the average Canadian is able to get. But then there's the risk of interest rates, managing the leverage, managing your cash flow, managing the tenants, managing the property. But you're stuck with this and you have to get into real estate because it's one of the only ways to outpace the debasement of the Canadian currency or the American currency.
So it's really about, yes, and it's these investments. Yeah, I get it. But then I'm also thinking, so what other ways and how do you get ahead? It's really about creating, it goes back to like one of the first books I ever read, Multiple Streams of Income, of the Robert Allen book way back. But it's streams of income, because those streams of income, as provided you have some control over them, as the currency value changes, then the stream of income can kind of, the value of that can stay equal to it. So the dollar number might go up. So if you're charging someone $1,000 for something, if you have a stream of income, you can adjust that charge that you charge them. That's the biggest way to kind of keep pace as well, right? And then, and that's hard too. When it's just a salary, that's hard because you're at the mercy of someone else. Now, if you have a business, or you can invest in other businesses that spit off cash flow, right? So you're talking about real estate. I'm just talking about businesses, same type of thing. Then that's the other way that you can kind of offset that as well over a period of time.
I think everybody needs to Google up Canada Money Supply M2, Trading Economics website, and stare at that chart. And when you see the pace of the line on that freaking chart on Canada's M2 growth, you have to realize you need to outpace the line on that chart if you're going to get ahead financially. Otherwise, the debasement of the currency that you're earning right now is debasing faster than you're growing your net worth. You are falling behind. So if you get like a 5% raise, 5% is like a good raise, but the debasement is like 8% a year, you're still falling behind. And then if next year you don't get a raise, well, the currency debases another 8%, you're falling behind again. And the next year, 8%, you're falling behind again. It's this hurdle rate that you must achieve, otherwise you fall behind. And that's why there's so many young people right now that are looking at their parents and say, wait a second, how did my mom, have you seen that Twitter video or TikTok video that went around that said, it's a young person who says, hey, wait a second, how did my parents, who are both teachers, we had a great house, we had like 2 cars, we had a cottage in the summer, they are on a teacher's income. Here I am now getting married, and there's 2 incomes. We can barely afford rent, never mind have a family and have a cottage.
Yeah, even if I saw that video, I wouldn't admit that I watched TikTok videos, so I'm not going to.
I don't know. So it was someone shared it to me on Twitter. It was actually great. It was somebody just freaking out about how the system's broken. But unfortunately,
I got other things to do with my life than spend hours on TikTok.
The only thing I have to do in my life is point at the central bankers and tell them that they're criminals. That's the purpose of my life. And to point out this beautiful new system that's being formed and spend more and more of my time talking about Bitcoin and the whole other system.
Okay, so I hear your point, and you're right, because we went from a society that one income was enough to one that 2 incomes kind of were enough to now.
Well, it wasn't really enough, but sure.
No, but now, maybe it wasn't.
Because no one had time
at one
vacation.
Point. Okay, sure. But I'm just saying to quote unquote make ends meet.
Okay.
But now, even to do that, the 2 incomes isn't working anymore, and then you have people, working 2 jobs and taking up like a side hustle or something else, because maybe it's even like Uber driver, whatever it is, because they just need a little bit more income to make. So like we've gone from 1 to what, 2.25, 2.5.
It's over 3. It's worse because now when you have children who are going to be adults, in the past 10 years ago, if you had an adult child finish university, a lot of the talk was, well, you know what? I'm going to help them out with a down payment to buy their house when they're ready. So maybe they'll start working for 5 years and then I'll help them out with a down payment. If you have 2 or 3 kids, not only do you have to help them out with a down payment, you might have to help them out with much more than that. If the average house in Ontario, and I know the real estate market's soft as we're recording this, but if the average house in Ontario is what? For like a townhome, you pick your city, you're going to be in a suburb.
I don't know the Ontario numbers, but yeah, 750.
Yeah. So, let's say $1 million townhome. You want them to live in Oakville or Burlington or just outside Toronto. I'm going to do $1 million townhome. Okay. 20% down is $200,000. They're going to be left with an $800,000 mortgage. Who's paying an $800,000 mortgage on whatever career they're getting? And if you have 3 kids, it's not like you're just going to be able to help them out get their first house. You're not going to be able to. That's the path we're on. That's what makes it so frustrating. You have 3 kids. How are you going to help them? You're going to need $600,000 to give them just a 20% down. Each of them is going to have an $800,000 mortgage. Welcome to your life.
What's interesting, so 33% of the money printed in Canada, so if the M2 supply has been in the last 3 years.
Yeah.
Right? So 1/3 of all the money in the Canadian system is the last 3 years. And
yeah, I'm just looking at the chart. That's
so here's
exactly right.
Here's something interesting. So
good job, Nick. That's about exactly right. Yeah,
I'm very smart.
Yeah.
There's a lot of people that don't like Trudeau, so they're going to be like, look, and his opponents use that against him right now. They're like, look what he's doing with inflation. There's 1/3 of the money supply in the last 3 years. Like, what the hell's wrong with this guy? And I'm not a Trudeau fan. I don't like him for a lot of different reasons. Okay, but the way the system's structured, no matter who comes in next, that's not changing. They're not going to bring it down.
No, but it's going to get. Here's the thing.
No, I know.
It's going to get faster.
I understand, but what I'm saying is, people they try to point at one person as the problem. So they're like, well, this liberal government's been a disaster, or whatever. It doesn't matter what government gets in next. Yeah. It's going to be the same thing's going to it has to keep going. Now, they might have a different reason. They might be able to do it a different way and structure it differently. So it's, it's kind of more stealthy than what we've seen just over the last couple of years. But the reality is the same thing's got to happen now because to your point, it's got to speed up, or they got to let something break and then kind of revalue something, or they have to just let inflation rip and steal from people further.
That's one thing that they could do. Let inflation rip at like 100% a year for 2 or 3 years.
And then it brings everything up.
Well, because then you artificially, going back to our example of 4 to 1, $4 of debt for every dollar of income. Well, then you're lifting up that dollar by inflating it 100% a year for a few years. So the ratio looks really good. You're like, oh, it's not 4 to 1 anymore. Now it's 4 to 4, We could make that ratio look really good, but we need to do 100% inflation for 3, 4, 5 years.
Yeah, and then anyone that's got savings, they get
destroyed,
totally wiped out.
What would be the social unrest in 100% inflation for 3 or 4 years in this country?
100%.
And it would need to be coordinated, because you're not going to do 100% inflation in this country for 3 or 4 years to fix it unless the US is doing it, the UK is doing it, Japan is doing it, France is doing it, so the whole Eurozone.
Stop hitting, you're just smashing the table.
I know. Well, this thing is just, it's just irritating. It's just irritating that like the system is so broken, and everyone, I guess it's frustrating to me because I see a lot of people who are suffering and a lot of people who don't understand why they can't get ahead, or why they can't take a vacation, or why they can't pay off their debts. And they're walking around, they come into our offices here at Rockstar, they talk to us, and there's a lot of confusion and sometimes self-blame. And I feel like saying, hey, listen, the system's kind of designed to outpace your earning capacity. So yeah, you need to learn the rules of the game, that's on you. But just understand that some of the frustration in your life where you're coming from, it's not because of anything you did. It's almost like you're running on a financial treadmill thinking you're getting ahead, but the treadmill is going faster and faster. So you're getting nowhere and you're actually falling behind. And if you don't keep up to the debasement, you'll just fall right off. That's kind of what I see going on. And personally, when I see Canadians in that situation who come up and talk to us like at events in our office, it really bothers me. I don't know, it just bothers me deep in my core.
Yeah, but you can't let it get to you. Like, look, it's everywhere. So you can try to help people, but this isn't a Canada problem. This is everywhere.
Yeah. So it bothers me for the whole world.
That's fair.
And then you can see the second order effects is that you need countries to spend more money, so they do silly things that make the problem worse.
Oh my gosh, yeah.
Well, what will happen is people will say, well, I'm broke, I need grocery rebates. And everybody's going to vote for the grocery rebate because they want the free check in the mail, but they don't understand that's going to debase their currency and make the whole situation even worse. So if you extrapolate, I guess I've just always been someone to extrapolate out my life. That's why I quit my job. I extrapolated out my life, and I thought when I'm 50, I don't want to be working in a corporate world. So, in my early 30s, I'm going to quit. We started Rockstar. I've always just extrapolated out the future and played the long game. And now I'm playing the long game. I think we're set up properly for the long game, but I look around at the next 5, 10, and 20 years, and that's what frustrates me. It's not 2023. It's like, holy shit, 2028? If people don't take action now, their purchasing power is going to be destroyed, and they don't see it. And then people will say, well, Tom, you're being a little bit like, come on, this is like a little doomsday-ish. I'm like, well, I don't know. I'm just doing math. If it doesn't keep increasing at a faster pace, you can't pay off for the old debt. You add in new debt. You have to add in more new debt faster pace.
Yeah, and you are being doomsday-ish, but it is what's happened in the past before. Like there have been other times in history where they've kind of run things like this and wiped out savers to save themselves. So, but it comes across like that. Right. And there's a lot of people, that it doesn't apply to, because if you don't have savings, if you don't have cash savings that you're sitting on, this doesn't apply to you because you're not going to lose out on those savings. What you have to be aware of is how you're going to change your income level to be able to kind of offset some of this. And a lot of those income levels do naturally change to a point to be able to afford certain things as well.
Yeah, I think, sure. Sure. Yes. I just think that the pace we're on now is a little wonky. That certain people will go.
Yeah, but the pace is there's South American countries right now that are on a wonky pace, and they're like.
And people want to leave there. We have clients who left those countries to come to Canada, and now the same thing's happening in Canada.
But it's not the end of those countries, is what I'm saying.
No,
right?
There are second order effects. Like I think something Jeff Booth was talking about when he was here really kind of resonated with me as well. When you look at a currency breakdown, look at countries that have poor quality currencies, and then look at the lawlessness in those countries. There's usually a correlation. I don't know if it's a causation, but there's usually a correlation with the quality of the money and the quality of the living standards, safety and otherwise, in those countries. And that's what I'm talking about. And I think you're going to be fine. I'm going to be fine. But name me a country that has a really debauched currency that has increasing safety standards.
How would you look at Croatia? Because their currency over the years, like there's no real safety concerns there, right?
Sure. When it hyperinflated, there was a war.
So, well, yeah, but you're talking, there was a war there for other reasons other than just.
Correct.
Let's be fair.
Correct.
But what I'm saying is I'm talking more recently. Their currency wasn't a stable currency. It was high inflation rate, right? To the point that no one would use it for major purchases. You couldn't purchase a home and get a mortgage in the national currency. But yet it didn't really impact there. So
it did. That currency became non-existent, and you earned in kuna.
I'm talking about the safety. That you mentioned, the safety in the country.
I said safety and living standards in the country.
Okay, because if you walk around that country,
no jobs.
You're still safe.
All the young people left to Ireland, Germany. No standard of living acceptable for families in that country. They took a mortgage in Swiss francs. If you stayed in the country, you were forced to take a mortgage in Swiss francs, but you had to earn in kuna. And then when the kuna lost purchasing power over time against the Swiss francs, the government had to step in and try to save the population, because I think it was 2015, 16-ish, where they had to save the population because the Swiss franc went up in so much value against the kuna, people couldn't make their mortgage payments. So yeah, maybe I don't have an example of like a specific safety issue because I wasn't living there at that time. But from a standard of living people, our cousin, all his friends left the country.
Yeah, well, that's natural. Well, it's no different than what's happening in Canada right now. People are leaving Ontario
to go to Calgary. And why are they leaving Ontario to go to Calgary?
Well, housing affordability.
This is exactly what I'm talking about. You don't get an increase in living standards in a place where the currency gets debauched.
Yeah, I was looking at safety. I was specifically talking about your safety.
I don't want to bring up my examples of safety right now, but you know the examples of safety that have happened in my life.
Yeah.
So, these examples, and this is kind of honestly.
Yeah, but a lot of things, you can't boil down a lot of things just to what you're talking about. It's hard to. I agree with you that it impacts everything. Like it impacts everything, but I don't agree I get the sense that you're like, this is the major cause for all these little things. And I don't agree necessarily with that.
No, sure.
There's other factors that can amplify certain things in certain areas.
Sure. And I disagree with that. To me, it's when you have a stable currency and people can have savings and their savings go up in value and they can afford a certain life and lifestyle. The second order effects of that are beautiful to the community around it. And when you have people who can't save, I don't know anyone who saves, and can't really take, they struggle to take a 2-week vacation. They feel like they're working to just pay off debts. And then the currency debases, as you just said, 33% in the last 36 months came into an existence. So they go to the grocery store and they can't buy steaks anymore. And they're looking at hot dogs and hamburgers instead of the steaks that they used to buy. Map that forward 5 years. I just think that's why you get people leaving Ontario to go to Calgary. That's why you get hot dogs on the barbecue instead of steaks. And to me, That's why you get a population of young adults who can't afford not only their first home, they can't afford rent.
Yeah, but specifically for like, this is what I mean. Like, I agree that impacts it, but specifically to this area, if our population growth hadn't been what it has been since probably for about the last 7 or 8 years now, then the issues that you're talking about, they're not nearly at the same level from a housing perspective.
Sure.
Right. So they still exist.
There's definitely
but there's other things that
other
amplify it.
factors. But to me, the base layer of any society is when anyone transacts in anything, the money you're using is part of that transaction. Like it's at the core of everything. So when we have a population that increases here and the country and the province and the municipalities have no savings. So then they have to issue more debt to build a hospital that's in desperate need in the community, which debases the currency even further. Well, now you have a factor, you're right, an external factor, population growth, but we have no savings. So now we have to debase the currency further.
No, I already said I agree.
Yeah,
it touches it. I'm just saying that there's other things that will amplify certain segments of it. It's not the sole, it's part of the cause, but there's segments that then will, really kind of accelerate things. There's certain circumstances that happen that accelerate things in certain sectors or industries.
And what I'm saying is the acceleration of those things wouldn't be as bad if we had a better currency.
Yeah. We're saying the same thing. No.
I guess I'm just kind of thinking it through, and I'm just thinking that, these other factors do apply and do affect the society. But
yeah, it touches everything. But then when it's no different than when COVID hit, right? And they shut down everything. So were there going to be problems already because they shut down everything and you couldn't was there going to be inflationary problems? Well, yeah, because you've shut down everything. Supply went to zero and there's still demand for things. So all of a sudden when supply and demand gets out of whack, that's going to mess everything up. But then you print all this money and you start sending out checks to people. And then what does that do? You've put supply to zero. You've not just left demand where it was, you've doubled it or whatever the number was. So then it just amplifies it that much more. So two problems there. One is, to your point, the debasement of the currency screwed it up royally. The other thing is the fact that they shut down everything when they didn't need to. That screwed it up royally too. So you combine those two things and then it just, they amplified on each other.
I agree. It's just, I don't like letting anyone off the hook with saying that, the currency's bad, but these other factors really kind of matter too. And I'm like, well, the pandemic and closing things down does suck. People who can't afford rent and with a population that's growing really out of control does suck. But the core problem really is the money that we're using. It's the core, and the other things just make it worse. Whereas if I had population growth and I had a stable currency,
there would still be problems.
But the problems are much more manageable because you don't have to solve them with more debt, debasing everybody's purchasing power.
No, it won't impact as many other things.
Yeah.
There would still be problems, but solving it with more debt, then all of a sudden you're trying to solve one problem with more debt. The more debt causes problems in 10 different areas.
Correct.
So you're trying to solve one area by taking the problem there, now spreading it out across.
And then now I have a question for you. Why do we have so much immigration here?
Well, I was going to bring that up before. We're trying to grow. That's how we're trying to grow our economy.
There are two things. We're trying to grow our economy desperately because we have a system that needs more growth because of the money system we use. And where are those people coming from? So people are typically coming from, like when our parents kind of came to this country, from a country that has a currency that is not as good as Canada. And the Canadian currency, even though you and I are, or maybe me more than you're being nicer, is brutal here. The Canadian currency is better than, like, if you look at some people who work with us that came from Egypt. Canadian dollar is actually better than didn't Egypt debase like 50% earlier this year or like 2 months ago?
I think it was last year, or maybe last year in the beginning of this year, they debased. I thought it was 3 separate times.
Okay.
I forget the percentage of each one.
So if that wasn't happening in Egypt, would as many people from Egypt come to Canada? Probably not. And if you look at somewhere like India or Pakistan, we should talk to Nadeem about this. I don't know the currency in Pakistan.
I don't know how well what recently has been done with the currency in India, because the India economy is strong because of their demographics and stuff. The India economy.
But I know they've been playing games. Remember, they got rid of their equivalent $100, whatever one of their currencies, the paper currencies they just took out of the system.
We should look into it because there's so many. I mean, I know specifically for students.
Okay, so we don't know India, but I know.
I'd like to know. I'm actually interested.
But how many people do we know here in the last 10 years from South America that when you and I were kids, many fewer people were coming from South America? And how many people do we have clients here from Argentina that tell us why they left Argentina was because they couldn't get ahead because of the currency. So to me, some of the population growth that we have here is, if you go to the first order problem, it's the base of the money in those countries that push people out because of the lawlessness, the lack of standards, increasing standard of living that pushes them to here, and relatively we're good, but we're on this treadmill that's not as good either.
Yeah.
And I guess really like
corruption in the government, because a lot of people will say, corrupt government, but the corrupt government really
exists here too.
Yeah, but it is really what you're saying. Like, the government is able to be corrupt because of the money. Because of the money. Yeah. Right. Because if they couldn't just print more money, then they couldn't be as corrupt, because they couldn't just splash the money around to be corrupt. It'd pay off different people and, all those political favors and that type of stuff. Right.
And I think the reason that I kind of maybe speak the way I am today is maybe I'm tired after the event. But I think it just matters to me because I feel like there's a solution here with a new monetary system that's being built out that allows people to transact, that's finite, that's permissionless. You can't censor it. And there's this opportunity for people to leap over, to put a little bit of their savings into it. And shit, man, it's a difficult thing to explain. Like, when you explain to people how Bitcoin works and that it's a network and don't look at the volatility of it, you're buying a percentage of something. It's like you kind of appreciate how difficult it is to explain this new monetary system that can be the lifeboat that so many Bitcoiners talk about.
Well, the volatility matters, right? So it matters a lot to people, because there's certain people. So you're parking some money in there that, you have some savings that you're expecting to just leave there 5, 10 years, whatever the number is. But some people have some savings and they might need it in the short term.
Yeah.
So to park
it's not for short-term savings.
I know. And that's something like, so it's not just different people in different situations, right? So it's a little bit different.
Yeah. And I think that's a big part of the problem, that it's because of that volatility, people can't look past it. I would say to anyone listening that if you want to think about it in a different way, the money that you earn from your business or your salary, when you take that money, you own a percentage of the purchasing power that exists in Canada's money supply, M2, as it is today. But tomorrow and next week and next month and next year, when the government just prints more and more money and that M2 grows up, the purchasing power of whatever money you earn today loses its purchasing power, because you own a smaller percentage of the Canadian dollar network, if you will. Whereas if you take a little bit, $10, $25, $50, and you put it into something like Bitcoin for long-term savings, the percentage of the Bitcoin network or money supply that you're buying is finite. So you own what you own, and nobody can debase it on you. So in dollar terms, it might go up and down, but give it, 3, 5, 10 years. And if the Canadian dollar goes up, gets printed much more quickly than it is today, the dollar price likely, I have no crystal ball, everybody do your own due diligence listening to this, is likely going to be higher. I would think yes, in for a piece of Bitcoin. So your $25 worth of Bitcoin that you buy today, likely in Canadian dollar terms, 5 years from now, it's going to be at a different price.
I go back to and that makes sense. And I have a question around that. That I want to come back to. But first, I just want to say, that's why I go back to the streams of income, because if you don't have the savings to put in there that you're comfortable with for the long term, I think the other way to hedge against this is being able to create streams of income that you're able to control a little bit versus just and I know it's hard. I'm not saying it's easy, but I think that allows you then to play the game and adjust those streams as you continue. You know what I mean? And that's hard. It's
hard. But going back to real estate, that's why we like real estate, because it's a stream of income in a box.
Yeah, but the stream of income right now, because of rent controls, is controlled a little bit.
Because of interest rates. Right? It makes it all difficult. Yeah.
But okay, so to your point about Bitcoin, you control this much of the network, right? Yeah. No, but because I'm going to play devil's advocate for a second. I like pissing you off a little bit, so I got to say this. So so you control this much of the network, and then and that doesn't change, right? Because there's a fixed supply, and we're not going to get into all the details around that. However, if you look at gold as an example, because the argument for gold would be a very similar argument. That you can control this much of the gold supply in the world. However, the gold supply in the world does grow, and they think, best estimates that it grows anywhere from about 2 to 3%.
1.6, 1.8,
okay,
under 2.
Okay, so let's say, call it 2%, right? So it grows 2% a year, so that conceivably you still own a percentage of the gold that is then... and it's, the gold grows 2% a year. So you lose that much, right? So that roughly that's what you're losing. But in that instance, and over the last now, 20 years, almost 20 years, the gold price has really gone nowhere, right? Is it 15 years maybe? Not 20.
I think it peaked out 2012 there for
20, it's only 10 years. I thought it was
10 or 11 years. Yeah.
Okay. So whatever. But it's really gone nowhere since there. So that
I think it's moving a little bit this week, but you're right.
But I see your point.
I see your point. Yes.
So then that argument, if people look at that and say, well, look, I look at gold and that didn't really hold true there. And I have some reasons why, that I think that didn't help, but I'm just curious. So what are you going to say to that? Because that kind of counters the argument that you have for Bitcoin.
I think historically and in the last 10 years, gold needs to be custodied somewhere. So some central authority, whether it's the GLD fund that I think JP Morgan is now taking custody of, or central banks, nobody holds the gold. They think they are buying gold, but when you buy GLD, the ETF that is the gold stock, and you're putting demand for gold, well, are you really increasing demand for gold? Because behind that fund, do they really have the gold that they're saying in the vaults? We only have to hope and pray. Nobody's walking through those vaults all the time and doing a live broadcast of how many gold bars they're adding and subtracting from the supply. So it's so easy for the financial system to manipulate a price of gold where nobody can audit it really easily. And because gold is big and bulky and heavy, no one really can audit it. The beautiful thing with Bitcoin, it's a public open ledger that if BlackRock comes to town in 1 month or in 6 months and says, we have a BlackRock ETF, well, if everybody wanted to call their bluff, we could say, hey,
where's the wallets?
Where are the wallets on the internet so we can all publicly see them in 3 seconds? We should be able to pull something up and see it. Whereas right now we would have to ask like Deloitte to go into some vaults and say, hey, does the Bank of England really have the gold that it says it has? Because I want you to count the bars because I bought $100,000 worth. I want to make sure that came off the market and went into the vaults there. Now, if everybody went to the gold dealers across the world and said, hey, physically put the gold in my hand that I want to buy, oh shit, I think the price would go way up from what it is today. But I think the financial system, Wall Street, London, they can manipulate the crap out of this so much. Why not? I mean, sell stuff and you don't really have to have it. FTX went bankrupt doing a similar thing, but ultimately, because it's an open ledger, when they got called out, I think it was the crazy Binance guy, I can't forget how it all went down, basically said, hey, we're pulling our stuff out. Where's your Bitcoin? And if they had just put out a ledger that said, yeah, here it is. Here's the address, or multiple addresses, whatever it is, you can see we have as much Bitcoin as we say we have. I think the run on FTX, that exchange that went bankrupt, probably would have stopped. But that didn't come out. So I just think Bitcoin
came out, they didn't own any of it.
And they were selling it.
Was it zero? Or was it like one or something?
But they had like one. Yeah. And then they were selling it to suppress the Bitcoin price. So in the last run up, they were actively selling customer funds to suppress the Bitcoin price. That came out in the testimony last week. But to me, Bitcoin is special in that the auditability of it is really much easier than gold. And can BlackRock and Fidelity and these guys play games? Maybe. But game theory would tell me that if Fidelity wants to say, hey guys, here's our ledger right here. You can all see it. And we're going to publish it once a quarter so you can see that our reserves are real. I got to think that more people are probably going to want to buy the Fidelity one than the BlackRock one. So I just think the opportunity for it to be more honest exists in Bitcoin because of the ease of the ledger. It's public on the internet. We can all view it. Gold, naturally, it's like kings and queens, man. They would take the gold from the villagers, put it in the vaults, and then protect it with guards. But no one really could check what was in there. You just kind of believed your kingdom had a lot of gold and they kind of robbed you from your gold. Whereas right now, I think we're going into a world that some of the biggest and best players are going to publish transparently, hey, here's what we have.
Yeah, it'll be interesting to see when when or if, I mean, you never know, but I mean, I think all signs point towards some sort of ETF being approved in the not too distant future, especially now that the SEC is not challenging the grayscale case. They're not appealing it. It seems like, fairly certain, right? And there's big money behind it, which ultimately matters because they printed more money, they gave it to these guys, and now they get to bribe other people to approve it, right? So it'll be interesting to see what happens, because that then does it start a different adoption phase? Because, one thing that Jeff Booth always talks about is just the exponential growth and how hard it is for us to see. We're so used to seeing linear growth, and it's hard for us to picture exponential growth and what it looks like. And it's happened. Like, just look back.
Well, if you look at the Bitcoin price now today, if we're talking it's volatile, it's $26,000 US or whatever.
It was behind you. It was 26 and change.
$26,000 and change. So, 3.5 years ago, it was like 8,000. 3.5 before that, it kind of goes through its peaks and comes down, But if you look over like 10 years since it came out in 2009, it's the best performing asset that anyone has ever seen. So yeah, it's volatile. And the reason I try to explain the volatility in this most ridiculous example. I'm like, hey, listen, through the Renaissance era in Italy, when the Medici family in Florence took Florence out of the Dark Ages after Rome fell and the feudal system went into effect in Italy, and the Medici family started minting coins. I don't think on day one florin that was minted by the Medici family in Florence had a standard value of 10 cows. Like, I bet it took 3, 5, 10, 15, 20, 25 years for these coins to be like, oh yeah, that's like a florin. Okay, yeah, I will always trade you about 15 cows for that. But I bet in the first 3 or 4 years, kind of like Bitcoin,
sure, yeah.
I bet it went from 2 cows to 15 cows back to 5 cows, and it was all over the place. So I bet what I'm trying to say is the florin to cow ratio, Nick, was just as volatile as the Bitcoin to fiat dollar price. See, that solves all the,
which is just as volatile as the fiat dollar to stake price.
Yeah, because there's not enough stakes in the world. There's one thing I wanted to bring up here. It was this whole fiscal dominance white paper that came out from the Fed that we saw. Let me just read this thing. Hold on. We've talked about all this kind of stuff. I don't know if there's Daniel's coming in. We'll talk about some housing stuff then. But yeah, there's this new paper that came out by the Federal Reserve Bank of St. Louis that they publish most of their research for the federal bank system. And in the fourth quarter of 2023, they came out with this new white paper or research paper that says fiscal dominance and the return of zero interest bank reserve requirements. And then there's this line in here in the abstract. Listen to this. It says, as a matter of arithmetic, so they're basically saying as a matter of fact. So as a matter of arithmetic, the trends of U.S. government debt and deficits will eventually result in an outrageously high debt to GDP ratio. So the trends of debt and deficits, which is what we've been talking about, are going to result in an outrageously high debt to GDP. But when actually will the U.S. hit the constraint of infeasibility? So they're basically saying infeasibility of the system's going to happen, but they're saying when will it hit? And how exactly will apology adjust to it? So it's a pretty serious little research report that came out here. This article considers fiscal dominance, which is the possibility that accumulating government debt can produce increases in inflation that dominate central bank intentions to keep inflation low. So fiscal dominance is basically saying high rates in a high debt situation mean high rates and more debt. That's fiscal dominance. So they're coming to the conclusion that, hey, when you have the last line actually of the whole report is this: ultimately, it seems likely that the U.S. will either have to decide to rein in entitlements, so they're going to have to either rein in all their spending that they promise everybody, or risk a failure of significantly higher inflation and financial backwardness. So like they're coming out with white papers that says, ultimately, you got to stop spending. We know that's not going to happen. We just know the governments are not going to stop spending. So the other alternative is the risk of a future of significantly higher inflation and financial backwardness. And that's what gets me going. When even the St. Louis Federal Reserve is basically saying our future, I'm going to repeat it, higher inflation ahead and financial backwardness. What the heck? I don't even know what financial backwardness is other than like a struggle. But like it must mean that they're like, yeah, like the math isn't adding up here and it's going to be nasty. And I guess that's the place I'm coming from, Nick, that I feel like when we talked about this stuff in 2012, when we did economic updates in 2012, when we started doing economic updates, the US debt was 8 trillion. Do you remember when we forecasted forward and I would put lines on the chart?
It looked ridiculous.
It looked ridiculous because I went way up and I'm like, oh my gosh, it's going to hit 20 trillion. And everyone's like, oh yeah.
Well, it seems excessive.
It seems excessive.
It's really going to go there.
It's at like $33.5 trillion.
Well, the best thing that keeps getting thrown around in a lot of places is that they added 500 billion. So that's half of a trillion in 2 weeks. That was at the end of September, right? Beginning of October.
Yeah.
500 billion in debt in 2 weeks.
2 weeks.
Like, it's like at that pace, like there's just nothing to be said.
And I think, I think that's just, it's that kind of trend line that gets me going when I see what's going to happen in the next few years. I think that's why I feel really passionate and really serious about it. And because I do think there's this thing out there, this new monetary network, and it's frustrating because nobody has enough savings to really participate in it, and it's volatile, so it scares them off. But I do believe if you could take some long-term, because your point's valid, the volatility matters, and you know any money that you need in the next 6 months, you shouldn't be putting into something that's been as volatile in dollar price as Bitcoin. But if you can have some savings that is a little out there, and you could buy $50, $100 a week, a month, every 6 months, it might be the literal lifeboat. As that one system dies, another one emerges. And the best example I have for that is like the phone system. Do you remember long distance? People go to convenience stores, and when they were going to call Europe or they were going to call Asia, you'd go to the long distance.
You'd buy those cards.
You'd buy those cards to
Chi-Chi. That's the one that our dad used to always buy to call Croatia.
Okay.
It was CICI. I'm pretty sure. I feel like that's
okay. So think of that whole system. People were using the phones. Remember, we had the phone in the family room of our house. Our dad would use that card. He would call Croatia.
Yeah, he'd call into so how'd that work? I'm thinking he would call into a VoIP system, I guess, and then that VoIP system would put him through. That must have been how it worked. Something
sure,
like that.
But it was going through our old phone line system.
Yeah.
And then one day, he started using the computer to communicate. One day we even tried to get him going on Skype to communicate. Remember, he had like a video camera and we were trying to communicate. Right. We would see Goran over in Croatia and that kind of thing. And it just transitioned from an old system that used the old phone line to one day in walks this new system and a new system emerges. And I feel like there's this monetary network. Like I have this report from River that just came out and it says the Lightning Network grew by 1,212% in 2 years. And the Lightning Network, for anyone listening, is this new monetary network that's being built on top of Bitcoin. And I can see it growing and I can see the opportunity there. And I guess where my passion, maybe frustration, or some people think I'm a little maybe too frustrated at things, it's because I see the opportunity to transition over, but I see also how difficult it is because you don't have savings and it is volatile and it's like tough to get there for all of us. Mm-hmm. But the new system is there. And I just don't want it to be too late. Like I don't want it to be 10 years from now and people are like, oh, damn, I wish I really grasped onto that new monetary system earlier. And I think that's kind of, if there's excitement that matches my frustration, it's that. I feel like screaming like, holy shit, this thing's taking off. The Lightning Network on Bitcoin grew 1,212% in 2 years.
You know what's interesting in that transition that you spoke about from an old system to a new system? If you look at the phone companies, you look at some old school phone companies, and I know there was accounting issues and stuff, but just the technology that wasn't keeping up, and that was Nortel, so they just went under, right? Mm. But then if you look at like the Rogers and Bell, so they were both into mobile phones, but because they had the infrastructure, because basically when the iPhone came out, that was going to destroy the mobile phone business
because they were selling minutes.
Yeah,
the iPhone sold data,
and then the reason they were able to make the transition from the old system to the new system is, the way I'm looking at it, is they had the infrastructure, which at that time those were assets. That was a network. They had the network's valuable, but I mean they had the infrastructure that created and supported that network, which is the assets then that they were able to take over into the new system. And there was value, and there was more value because there was a network.
You're making me right now?
No, but I'm just saying, this is anyone that has these assets, that if you can take your assets and they still apply to the new system, which so much will, like lumber still matters, steel's still going to matter, all this type of stuff. When you can take that stuff over, that's what helps you make the transition. And I know you're talking Bitcoin and stuff like that, but I'm just looking at it. Because you were talking about phones and voice over IP, it's just interesting to look at.
Because
it's the only reason they survived, or they'd be gone.
And what were those assets? It was a mobile cellular phone network that they had built out.
It was a network,
Yeah, and so now here's something I'll throw at you, is the next transition isn't just an information data network.
Yeah, it's a monetary network.
It's a network that measures the information or the price ratio of every single good in the world. Mm-hmm. How valuable is that network? And that's where I think someone like Jeff Booth, when he looks at it, and he's much calmer and more well-spoken than I am for sure, but I think that's when he looks at it and why he gets so excited about it in his very articulate, calm manner. And where I feel like lifting up the chair over my head and smashing it on the ground and tell everyone, like, don't you see that there's something here? And again, Nick, just to be clear, and you're really good at bringing this to a level-headed conversation, is that nobody should run and put more into Bitcoin that they can't afford and for less time than it should be invested. And this is a long-term,
Jeff said,
and it could be very wrong. Who knows?
Yeah, that's true. 100%.
Who knows?
Yep. Yeah. Well, Jeff says it well too. He's like, because the way he looks at it is he doesn't buy Bitcoin to get rich. Like, that's not the idea for him.
And we didn't even talk about price, I think, when we were
No, I don't think we did at all.
Yeah.
But that was, it's very clear. Like, he kind of prices everything in Bitcoin, essentially. Like, he's just kind of done this transition, So it's just weird.
I like the example when he said, listen, it's already happening where Bitcoin is getting more and more valuable in the world. My lake house used to cost 300 Bitcoin. And if I sold it today, it would only cost me or if I was to buy it today, it would only cost me 50 Bitcoin, meaning that every Bitcoin has gone up in value so that his home relative to the Bitcoin, the price ratio there has completely changed. So Bitcoin's already making things in his life less and less expensive if a decent amount of his net worth is in Bitcoin, which I'm assuming we can assume that it is, right? So that kind of transition's happening. There was one other point I wanted to make on this, is that in the old system, the foundation of the entire system is debt. So the U.S. Treasury, which is the base of all the debt, is considered the safest thing to own. And the interest rate that is returned on that is called a risk-free rate. So that if you buy this debt...
Yeah, well, it's not risk-free anymore.
No, it's not risk-free. These bonds have lost like a ton of value in the last year. But the idea is that you buy a treasury and the rate of return you get on that treasury is your risk-free rate, because the bond is backed up by the U.S. tax dollar payer. And it's the base of the whole system, backed up by the government of the U.S. and the citizens of the U.S. So it's the best. Last year hasn't been great, but that's kind of like through our lifetime, that's been it. But it's still debt that is like really running the system. Whereas in this new system, if the Lightning Network does what I think it's going to be able to do, where you can own some Bitcoin, which would be the base of the system, and then you can put it onto the Lightning Network to offer liquidity to the network to make this network exchange monetary transaction and value at a more efficient pace, and people are using this Lightning Network and it grows. If it can do what I think it's going to be able to do, where you can keep custody of your keys or the control of ownership of your Bitcoin, but also earn some sort of transaction fees, this to me has the potential to be the new risk-free return, almost like you're parking your money to help the liquidity of the entire network, and in exchange, you get small transaction fees back. It could be really, really exciting. Whereas not only does the Bitcoin that you own go up in purchasing power over time, that you can use it for things like that, where you don't lose custody of it, you control it, but you're still participating in the network, offering liquidity to the network and getting fees back for that. Wow. That to me is like mind blowing. Mm-hmm. And I don't have the technical expertise. I'm about to read this report. I don't have the technical expertise to understand if that's coming down the path, but it seemed like with our discussion with Jeff Booth and what some of the companies he's invested in, it seems like that's coming.
Yeah.
So that's kind of exciting. It's just, how do you explain that to everyone?
I think really if this thing gets built, continues to be built out, so the Bitcoin network and the layer 2s on top of it and everything, I really think it gets exciting in a lot of ways, because you just realize what becomes possible if you ever start using this network in the smallest way. It's very hard to go back to the old network. Like when I have to walk into the bank to do something now, I'm like, this is so, just the whole process is so antiquated.
Well, they even tell you not to come in. Last time I went in for a wire, did you know what, TD? They apparently on our web banking, you can do the wires now on the mobile interface.
Yeah.
I haven't tried it yet, but they were actively promoting me not to come in. They're like, you could do this wire like online. I'm like, really? I had no idea. So we got to check that out. But if this,
think when you wire money, how many intermediaries there are
taking fees
for the exchange, and then the wire, and then the exchange back, and there's all sorts of stuff, all taking fees versus, and then you could try to send it to someone, and then a matter of really seconds, you can just see that it's been sent and confirmed halfway across the world. Like if we had this one,
the head of PayPal's transaction division, or head of whoever was running the PayPal interactions, I think on the What Bitcoin Did podcast, he was just on there talking about he's dedicating his life to Lightning Network and making this work. So a lot of people,
same with Jack Dorsey, who was in the finance side of things before too, right? So they see, like, the people that see this type of stuff. It'll be interesting too, like, so on Twitter or X, Musk they're doing a trial in a couple of countries where they're charging users $1 a year.
Yeah, that's
how they're trying to get rid of bots.
To start the spam bots.
But to do that, you have to verify your phone number, and then they're going to have to verify a credit card or something like that. So I just wonder if something like that gets to a point as well, where they use something like this, and then you remove that barrier altogether.
Yeah, it seems silly at this point to use the US dollar for a global network.
I wonder how much pressure there is for verification stuff from the government. Do you think the government really wants an anonymous social media site being able to kind of float around
to verify on something like Bitcoin? Yeah.
But anyway, it'll be interesting to see.
But if this, and then I guess the last thing I'll say on this is that if this brings on a world where our elderly can have savings that go up in value,
that would be amazing.
Then they're roaming around the world, passing on wisdom, having time to spend with grandchildren, having time to spend with their families in peace, with peace of mind.
Yeah.
That to me, instead of coupon clipping or scared they can't afford their rent, scared they don't have enough money to live out the rest of their years, to have a money that would support them, that goes up in value instead of a money that loses value over time. Like if you're retiring right now, you have to bake in how much inflation into your projections over the next 20 years. The Federal Reserve is saying it's going to be a lot. The world, the type of living standards we'd have in that world, to me, change greatly.
Yeah. No, that would be amazing.
A nice positive end there. Nick.
That would be, well, you toned it down a little bit.
Because it's like,
I don't get scared. I'm not scared of you. I'm taking Ruben's line.
I think
I'm not scared of you.
I think when I look around, you just look around, you're going, what is going on in the world right now? So much of it seems like a mess. Maybe it's just...
you got to focus on both sides, because there's so much of it that's good too.
No, I agree. Listen, I'm a positive person, but I think I'm to the point where I don't want to brush aside the stuff that's wrong anymore.
You're just being direct, and it's fine. You have to be direct, because if you're going to try to get through to people, if you want to, if you're trying to communicate a point, you have to be direct. And I mean, for years, I've always been accused of being very direct.
You've been great at it.
Not good at sugarcoating stuff, but it's just the way you communicate. So it's not a bad. I don't look at it as a bad thing.
And do I think we're all going to get through this? Heck, our family in Croatia got through hyperinflation, a war, everything. Everyone's going to get through everything. There's no doubt in my mind. Can there be some weird times in life? Absolutely.
Yeah.
But can everybody get through what's going to happen in the next few years? Absolutely. I guess I see it coming, and
it feels like it's pretty.
It's nearer than it ever has.
For you, it seems pretty clear that this is the path that we're going down. And it's fair, because it's hard to see any very feasible that have a decent degree of probability other paths.
Yeah.
Right. It's hard to say, and it feels that, so you're coming from it all makes sense. You're coming from a good place. I just got to be a pain in the ass.
No, it's good. It's good. All right. Thanks, little brother Nicholas Karadza. Over and out. Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Term show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.